Today we've announced our interim results and they show a strong profit for the first half of the year. That figure's probably worth unpacking because it compares against a period of abnormal profitability in the first half of 2023, which was driven by the energy crisis. In fact, what happened last year is the business then swung into loss in the second half as those effects reversed. And this time we've seen a much more normal, much more stable energy market, which gives us a much more normal pattern to our business. So in fact, the half-year profit we've announced today is only 23% shy of the full-year profit we hit last year. So that's why the board has been happy to reiterate its guidance on our full-year outlook. There are a couple of other things in the results we should draw people's attention to. We are moving towards reporting our new services division as a separate segment. That will happen at the full year, but we've today been clear that that side of our business is growing. We've been, if you turn to the balance sheet, you can see that we still have £40 million of cash on the balance sheet. It's a very important part of Good Energy's transformation from an asset-heavy and leveraged business into an asset-light business with a very strong balance sheet and a cash-positive position. And that cash position combined with the profit performance is the reason that the board has today announced a 10% increase in the interim dividend to 1.1 pence. In services, we are continuing to grow our energy service capability at some pace. We reported today that the revenue is growing in that side of the business. We acquired another business, JPS, during the first half of this year, and that joins our existing capabilities to give us a footprint right across the south of England to do high-quality heat and solar and storage installation aimed at both homes and businesses. The businesses we bought slightly earlier are more closely integrated with Good Energy now. They trade under the Good Energy brand name. We sell and market across both our supply and services business, and we're expecting JPS to begin to come alongside that during the next part of the year. So a really positive start in terms of consolidating our services business and giving us a platform for growth from here. It's been a good half of the year for the supply business. Two things I'd highlight here. Firstly, Ofgem reviewed and approved our derogation from the price cap. It's the first time they've reviewed it on an annual basis. And I think shareholders and consumers can just take comfort from that the regulator has very closely scrutinised whether our business model does indeed provide very clear support to the UK's small generators and links consumers with renewable generation, and they were happy to certify that it has done so. And we are one of the very few suppliers now offering an hourly matching product into the business energy market, where businesses can literally see on an hourly basis how close they are matched to renewables, and that's very appealing to some of the larger and blue chip corporates who are very serious in their carbon reporting. I think the other thing I'd point to is the fact that we are now an accredited B Corp. We are the only domestic supplier in the UK to be a B Corp, and we've come through the certification process with flying colours and a very high score, as I would have expected. Good Energy's always been a purpose-driven business with very strong environmental credentials, and it's very nice to have the, if you like, external certification of that through B Labs. Perhaps regrettably, energy tariffs are in the news again, and we've seen a 10% increase in the Ofgem price cap, driven once again by the volatility in the cost of gas, which is very subject to international affairs. I agree, frankly, with the new government's view that the only route out of this in the long run is that we need to fully embrace renewable power, because that is the only energy source in which the UK can be self-sufficient and not subject to the price movements of the international markets. One of the key aspects of that has been the call for a so-called rooftop revolution, and I think some of the policy work coming out of the Energy Department has established the fact that the south of England is a region of critical importance just because, frankly, it has a lot of rooftops and reasonably abundant sunshine. And I think that is very central to Good Energy's core purpose. It's always been our core purpose of driving a decentralised approach to energy generation and helping as many people as possible reach both a carbon neutral but also a cheaper position in terms of their energy consumption. And the company, with the addition of our services capability along with our heritage as the micro generation specialist, place where we speak for roughly a fifth of the UK's small generators, is very well set up to play its part in the next phase of the energy transition. The outlook for the immediate future and beyond is a very positive one, and I say that for a number of reasons. The first is that with the change of government, we can clearly see a change in the policy agenda, which is very favourable to good energy. You can already see changes to planning reforms to allow more onshore generation. GB Energy is focusing on community energy. There's been talk of a rooftop solar revolution, particularly in the south of England. And these are all integral parts of trying to shoot for the 2030 green grid target that the new Energy Secretary of State has put in place. And these are all things that obviously good energy is well positioned to either serve or benefit from. So we have a real tailwind from a policy point of view. We can expect potentially further acquisitions on the services side. So we've grown and consolidated a position in the south of England. We can see particularly strong demand on the commercial side for solar and storage installation, and we are looking to invest some of the cash further behind additional acquisitions to begin to give us a national footprint, allow us to benefit from additional scale. It's actually been a slightly uncertain start to the year in the electric vehicle market. Some of the registration growth has been slowing. The most recent numbers are more positive, and ZapMap is still really well positioned to benefit from the growth in electric vehicle driving and ownership. Its download numbers continue to be strong. It's reached over 1.6 million downloads. Its usage and market share is very high. There are just shy of 1 million registered users of ZapMap now. Its business performance is growing, so the annualised revenue run rate has got above £2 million and is growing. The subscriber numbers well above 20,000 subscribers and growing. And so we were very happy to continue our investment behind ZapMap as we look to build the definitive platform, if you like, for planning and payment for your electric vehicle, both in the UK and indeed beyond.